welcome to ETF 360. I'm Tom Lydon with ETF Trends, along with our Director of Research, Dave Nadig, and a special guest, Arne Noack from DWS. Arne, we want to talk about ESG. The assets have been tearing in 2020, and it hasn't slowed down in 2021. DWS has been on this for a while. What's going on in ESG?
Yeah, Tom, we're actually very glad to see that trend finally materializing. I think those of us who've sort of followed the ESG-related investment for some time have expected, actually, frankly, for that to happen earlier. But they say better later than never, and it's really the case that the idea of environmental, social, and governance-related investing is starting to penetrate mainstream investors' consciousness. And on our side, we're really delighted to see that, because not only is it prudent to think about one's impact in these areas just in our day-to-day lives, but it's really important to think about these kind of aspects when it comes to, where do we put our money? How does our money really impact the things around us? And frankly, it makes sense from a financial standpoint as well. So very delighted to be part of that trend.
So Arne, I think a lot of investors are new to ESG really over the last couple of years. And so I think folks are worried about whether they should go all in on this. Do you think of ESG as a little bit of a sleeve, or do you think of it as an approach to your whole portfolio?
Great. Those are very important considerations. And in that same realm that we've heard from time to time are certain concerns around the lines of, hey, if I incorporate ESG, it really costs performance, so I don't want to do that. And I think what our product launches, the product launches of competitors, and the general availability of ETF products here in the US and globally has shown is that really doesn't need to be the case. So to your point, Dave, you can really think about it from both angles. You can look at ESG under a more thematic lens. You can look at climate-related products and mix those in as certain sleeves, as certain exposures to express either value or a certain, conviction on that particular industry. Or you can really make it a mainstream core aspect of your portfolio where, you, instead of tracking the S&P 500, you track the S&P 500 ESG index, which in and as itself is super similar to the benchmark, but has meaningful improvement when it comes to environmental, social, and governance-related aspects.
So tell us a little bit more about that product SNPE, right? It starts with that base of the S&P 500, but what are you doing in there that makes it an ESG fund? Why should investors be considering that versus their regular S&P 500 exposure?
SNPE really is designed to be the go-to product when it comes to US large cap exposures, and in particular for those investors who are mindful to having the S&P 500, the largest and most popular index in this world, as their benchmark. And so the starting point really is that the S&P 500, as everyone really knows it, and the ESG component that is being utilized in the ESG version of that benchmark really looks at it in such a way that is essentially industry group neutral, but instead of focusing on specific sectors or industries or tilted from a certain point of view, it really focuses and invests into only the top 75% names from an ESG perspective within each industry group. So that means you really, with S&PE, you get a product that is very close to the S&P 500 in terms of its look and feel from an exposure standpoint, from a performance standpoint, but has those meaningful improvements that are related to environmental, social, and governance aspects.
Hey, Arne, Europe is way out in front of the US in areas like wine, cheese, soccer. Why is Europe also beating us as far as ESG as well?
I wouldn't be so sure on the wine. I'm personally not a wine drinker, but I hear that might be the case. Also, you might get some regional differences, that the German and the French might not be on the same page. But without going off on a tangent here, I think it's very, very fair to say that the European market is significantly ahead when it comes to ESG. And ultimately, I would say there's various drivers, but the outcome is that regulators in Europe have really for years been pushing regulation and legislation towards making sure that ESG considerations are not only tangential aspects in the practices of financial advisors, but in fact, financial advisors are starting to be required to make ESG front and center in their client conversation. So, such as, for example, asking straight up questions: how relevant is it for you? Or having more subtle questions around the values that a certain investor desires to express in their portfolio. And those are regulatory backed developments and developments that we slowly start seeing here in the US as well when it comes to the awareness on that topic from financial advisors. But so far we don't see it on a wholesale basis, or don't see it backed by any particular regulation. But we're very happy to be supportive of that trend, because we believe it's critical, for us as an industry to be fully educated on the subject.
Well, we're surely playing catch up. Arne, thanks for grabbing some time and being with us. And thanks everybody for joining us on ETF 360. We'll see you next time.